Welcome, everyone, to the first episode of the Optimal Blue Capital Markets mini-series, where we'll cover some basics about the primary and secondary mortgage market, including pricing, hedging, and trading dynamics, to better understand the role of pricing throughout the lending process. In this episode, we'll be focused on how pricing is interconnected from the very start of the mortgage loan all the way through closing. My guest today is Erin Wester, Vice President of Product Management at Optimal Blue, to kick off this mini-series. Erin, welcome to the podcast.
Thank you for having me. Excited to be here.
I'm excited to have you here, and I'm excited for this conversation, which is really to give us sort of a better understanding, right, of product and pricing, and just kind of what you guys do. So let's talk about, the bigger picture here for a minute. If you look at the primary and secondary market connected by like a transport system of bridges and highways, can you give us a high-level overview of that connection, as well as the role a product and pricing engine, which we'll call PPE, plays in that system?
Yeah, absolutely. So I think it is far more intricately interwoven than maybe it seems on the surface. The PPE, or the product and pricing engine, is truly, in almost all cases, an inherently integrated solution. So it's very dependent on being able to transfer accurate data quickly to any different avenue that a lender or a borrower may need to interact with the eligible products and pricing. And so that kind of interconnectivity, and it's a great, metaphor with the highways, because that's very much how it feels sometimes. It's very important that the PPE can be plugged into any component or platform where a financial institution wants to share their products and pricing, either with their own staff or directly with their customer base. So the PPE not only kind of lives and breathes throughout the life of, lead aggregation or the initial consumer inquiry when starting to look to purchase a home, all the way through to, some of the more critical integration points like a loan origination system, where you're actively engaging your product and pricing engine from that time of origination all the way through until hopefully a few days before closing, to make sure that all of your pricing information accurately represents all of the loan data that lives and breathes and grows with the loan over time through processing and underwriting, and making sure that all of those integration touch points are immediately available whenever any of those data points change.
I like the bridges and highway analogy. I also think of it as like interwoven, right? If you think about fabric, because it's not like you can just pluck it out. It needs to be totally integrated. And I'd love for you to highlight, what's the largest benefit of that sort of interwovenness or interconnectivity for both lenders and borrowers?
Yeah, it's really about minimizing restrictions. So if you have some of your loan officers or origination staff that are used to and rely on a specific CRM, for example, or maybe you work in the wholesale space and you have TPOs that you want to be able to support any sort of platform that they use today for all of their leads and how they manage their prospects and their customer pipelines. The ability to have, with the flip of a switch, the ability to engage your product and pricing engine in any of those different avenues allows you to really help your sales staff to be able to, reach their audience in the way that they'd like to and the way that they're comfortable with. And then, of course, like I mentioned, there's going to be those critical integrations like the loan origination system, where there usually isn't much choice, and that's kind of dictated usually at the financial institution level. But that's going to be the criticality of those highways, because that's where, all of the data accuracy really is where the rubber meets the road, to make sure that, you're not losing any reputational risk with making sure that the borrower feels that they were transparently quoted from the beginning of the process all the way through to the end. That's when, a PPE that has a single source of truth, if you will, for all of the configurations and the data that comes out of that platform, and just kind of plugs into those other areas, hopefully financial institutions can take a sigh of relief knowing, okay, I know my accuracy is taken care of. Now it's just simply, where all do I want to pump out my product and pricing? And that's, a very important piece of making a successful PPE, is having that kind of open network to be able to source out product and pricing wherever a financial institution needs it.
No, that's a great explanation. Let's zoom in a little bit into the loan process, right? We've talked about bigger picture. Let's look at the loan process. Can you discuss the stages in the life of a loan where the pricing engine plays the most important role?
Oh, yes. I mean, there'll be arguments that it's important all along the way. Of course, that's probably a selfish argument for myself. But, product and pricing is engaged at the moment a borrower starts looking for a home. So they could go to any of the lead aggregators online, just do a quick, simple Google search, and then immediately see, our customers stacked against each other from like a competitive view for a consumer who's just looking for the most affordable rate, the most affordable way to purchase their home. So proactive pricing is engaged well before the loan's probably even created in the loan origination system to be able to do that lead aggregation or those kind of auto quoting capabilities. And then once a loan is created, once we do have a transaction, the PPE should be engaged all along the way. So from registration or float to keeping borrowers engaged throughout the initial disclosure process and making sure that they feel comfortable and confident with the rate that they're presented with. Because at the end of the day, most borrowers are just looking at, here's my monthly payment that I can afford. Can you help me get to that number? And they don't care about discount and rebate. Now they care about closing costs, right? But
Right.
a lot of the terminology that matters, very much to mortgage professionals and the consumer space is just give me to this payment that I can afford. So being able to have a PB that can continually reevaluate the loan criteria to make sure that everything is coming out in the borrower's best interest that meets company policies is highly important. And that process is engaged, like I said, from registration or floating of the initial disclosures through locking all the way through to closing, because the nature of the mortgage life cycle, things change. You need to repull credit, rerun AUS, the appraisal comes in. You have all these different checkpoints that could have material impact on what a customer will see at the end of the day in their closing disclosures, and making sure that we're honoring the original agreement around trying to keep them within their budget.
Is there a particular stage in the loan process that might surprise people where the PPE plays an important role?
Yeah, there have been a few that that have been more creative, I think is probably a good term for it. And the API platform that Optimal Blue makes available is has opened up a lot of that creativity. So we've seen a few different implementations where I'm like, oh, it's a really good point. Maybe we should build an out of the box solution for that. And one of the ones that a few of our customers have custom built themselves is a way for the underwriter to engage the PPE. And they're not a typical PPE user. It's typically production staff, lock desk, secondary markets, that kind of user personas that we're targeting on a traditional PPE. But underwriters are normally not getting logins to Optimal Blue. But they use the APIs to look at investor eligibility for loan sale criteria, which I thought was a very unique use case. And they're able to not reinvent the wheel, just bounce it off our eligibility, platform that already exists, and manage that as the underwriter can kind of check off or clear off those investors. That was been a surprising one that I thought was really creative.
Well, I also think it points to the market we're in,
Yes.
right? I mean, it's not just like, oh, there's just all this low hanging fruit out there. We can just, the product and pricing engines right now are super important.
Yes, yes, here, here. We're the messengers right now of poor news when it comes to rate increases, but it's really important from a profitability perspective when markets get like they had been, to be able to make sure you're getting every basis point you can, and still being competitive and still getting the best rates we can out to the American borrower.
I love that. Okay, so during these important stages, right, how do you, Optimal Blue, ensure accuracy and efficiency?
Oh, yes. We've got staff fully, that's all they do. We've got a very talented group, a large group of folks that just live and breathe content, guidelines, investor bulletins 24/7. We also have a great amount of tenure at Optimal Blue that we're very proud of with our employees, and how long they've been with us. And the content team, who that's what they do. They live and breathe all of that. And of correlation with our investor services team to make sure that the content or the eligibility or the LLPA grids, the SRP grids, all of the components that go into making, final price, street level pricing, all of that is accurately maintained quickly within our platform. So a moment a bulletin drops, we have a lot of automated systems that compare that, identify the changes, and then we go and make those changes. A human is still doing that to ensure that the changes are done correctly. Because the one thing, we cannot mess up as a PPE provider is accuracy. That is the oxygen in the room that we provide. So we need to make sure that everything that comes out of our engine is 100% reliable, because the last thing we'd want is to create any sort of reputational risk for any of our customers with pricing inaccuracies. So that team that lives and breathes all of that, that is their sole job. They are not wearing any other hats. That is very critical to the success of our platform.
Yeah, I can only imagine how difficult that job is, and all of the things in place from a technology standpoint to make sure that they can do their job. But like you said, to still have that human in the loop,
right,
to make sure that it all makes sense.
Right. And AI is, greatly improving some of that turnaround time for identifying the bulletins, identifying what's changed. And I think that we'll continue to rely on that and grow our faith and our use in that. But that last, human touch to ensure that, yes, this is what the investor intended through either our conversations with them or our understanding through communications that they provided us, is very important, because we just want to make sure, like I said, that oxygen in the room remains in the room and nobody notices any part of that's gone.
Right. Well, that sets up my next question really well, which is, how does Optimal Blue help provide the best rates for lenders, right? You talked about at the end of the day, this is what your borrowers are really focused on, right? Is
Right.
the rate. So how do you help provide the best rates for lenders?
Yeah, a lot of that is just flexibility and control of how the pricing is displayed to the production staff. The folks are interacting with the borrowers every day. So, of course, the foundational building block there is ensuring that the items coming out of our engine are accurate. But then being able to layer on financial institution specific levers that they can pull or controls that they can engage and work with allows them to present any style of pricing that they'd like. So, for example, we have, folks that just want to deal with rates in eighth increments. We have folks that, are fans of the, 6.99 or 5.99 rate style. And it's really all preference. It all ties into the individual marketing that the financial institution wants to get behind when engaging their customers and their prospects. And those kinds of configuration and controls are really important to make sure that we can execute on our customers' vision of how they want pricing returned. And then the most important person in this whole life cycle, the loan officer or the TPO user, because they're the car, if we'll use our highways analogy, they're the car that delivers the data directly to the borrower. So we want to make sure that we're presenting information that's extremely beneficial to that persona, to the loan officer, to the originator, to the TPO user, to be able to quickly best execute all of their eligible products in a single grid. So we have views for that. We have different side-by-side comparison views that they can run, just making sure that they have all of the information presented to them in an easy-to-consume way to then be able to transmit that to the borrower.
So along those lines, can you discuss some of the pricing strategies to save loans and or broaden eligibility?
Oh yeah, so that we could talk all hour about that. But yeah, so there's lots of different ways to do that. We have some, pretty kind of what I'll call carte blanche kind of controls, to where you can start at a high level and work your way down to the nitty gritty. But we do have rate price selection strategies that our admins can control, and that's as simple as rounding to par. And saving those basis points to be able to, put those into your margin. And then we could, of course, get down to any layer of margin or eligibility or max price rule, anything that you want to put in there to be able to really refine how you're going to, be able to make money off of originating these loans. And that's going to be important based on, the category of product we're working with, could be based on the loan amount range, could be based on the geographical area, the loan purpose. All of these things are extremely vital to be able to have dynamic nature, to be able to impact pricing, to be able to do really two things, making sure we're keeping our customers as profitable as possible, as well as being able to keep them competitive. So I think, there's not only the different levers that you pull and the different controls that you can engage as one side of that coin, but the other side of that coin is, how do you know that you're making those changes in the most accurate way or in the most effective way? And really the guiding principle there is going to be competitive insights. So how can we give our customers competitive insights into LO comp in the region, into concessions issued in the region, into average locked rate, so you can understand, are we buying down the rate in this area more than others, for example? So being able to surface up that benchmark data, across, 12, the footprint that we have, to make that information statistically reliable is really important, so that they know when they pull this lever, they're doing it based on, fact-driven results from those data products.
It's so important right now, right? So let's talk about that. The importance of real-time pricing data for lenders today in this market.
Oh, yes. Really in every market, because you never know when the winds will turn. And that's another thing, when rates change in either direction, there's a lot of activity that happens across whatever PPE that you guys may use out there listening here. But there's a lot that goes into aggregating all of those rate sheets, especially when the market's very volatile. And real-time pricing is the only way to remain competitive, especially when rates eventually drop, or when they've dropped in the past, and you've needed to re-engage either your pipeline, resurface refi opportunities. You need that, not only real-time pricing, but that real-time pricing presented to you in a very fast fashion, sub-second fashion, being able to surface that data as quickly as possible, as well as across as many different applications as possible. So critically important, and I'd argue at any time, because we never know when those winds may change.
I think that's really interesting that you make both of those points. Like it's fast, it's accurate, but it's also the way that you present it in a way that your lenders can act quickly on the information. So it's real time pricing data, but presented in a way that makes it easy for them to make those decisions.
Right, absolutely critical, and that's, I think, that's a big a big component of where we've been heading in this past year and into next year, is how can we continue to make the presentation of how we engage with 90% of our plus of our users, which is going to be the production staff, as efficient as possible. We know we've got the accuracy down, and how can we just get more efficient? How can we take a lot of the guesswork out of the loan officer's hands? How do we minimize the clicks for them trying to creatively think about the best offers for customers, for borrowers? And we're investing heavily in that right now, and we've got some really great stuff we're excited to share with everybody here in the next few months, where we're going to be automating a lot of that with AI solutions that we're currently in development with. And the beauty of that is, because we have that foundational accuracy component, and we have the footprint that we have, it makes our AI all the more powerful. And is the oxygen for AI is going to be the data. So we've got a really good foundation for us to be building off of. But that's a critical focus for us, is making sure, now that we know we got the right data, it's presented quickly, how can we continue to tweak to make sure it grows with the changing needs of the market, to make sure that the loan officers are feeling like, okay, this is making my job substantially easier. I can now focus on getting more business versus sorting through rates. We never want anybody having to make extra clicks to lock a loan.
I love that. Erin, thanks so much for sitting down today and really explaining some of this. Fascinating to find out what you guys are doing and how you're really focused on helping your lenders.
Awesome. Thank you so much for having me.